Okay, let's unpack this.
Let's do it.
We've entered this really fascinating, highly competitive new world in business tech.
Aggressive, even.
Very aggressive.
Yeah.
We are talking about AI assistants today,
Mhm.
but not the general ones you ask for the weather.
No, this is a different league entirely. We are looking at a stack of sources describing these hyper-specialized co-pilots.
Right. And they're built for specific, really high-stakes environments. We're talking project finance, M&A strategy, even personal career coaching.
That's right. And our mission for this deep dive is to really analyze two things. First, the incredibly specialized value they claim to deliver.
Okay.
And second, and maybe more interesting, is the competitive language they use to do it.
That's what jumped out at me. The sources don't present these AIs as just neutral tools.
Not at all.
They read like rival experts. All of them are vying for supremacy in the boardroom, each one claiming that their specific function is the most essential one.
It's a battle fought with positioning, and you can almost feel the tension in the descriptions.
It's like a cinematic fighting game showdown for the soul of the company. It really is. You've got one AI claiming it's the master of daily financial chaos.
Mm-hmm.
Then another swoops in and says, no, I'm the one who handles the multi-billion-dollar deals.
And then there's a third one that sort of sits above it all and critiques the entire structure they both operate in. It's fascinating.
So we have to be forensic analysts today.
Mm.
We're searching for those beautifully disguised barbs.
The passive-aggressive digs.
Exactly.
Yeah.
The subtle ways one AI dismisses the importance of another's work just by defining its own turf.
And the core conflict, the hook here, it really boils down to who provides the real value.
Yeah.
Is it the tool that's in the trenches, diligently saving thousands of dollars on operational overruns every single day?
Or is it the one that swoops in and validates a multi-billion-dollar acquisition?
Exactly. By looking at how they describe themselves, by digging into the language they use to sell confidence, we can actually watch a competitive hierarchy being built right in front of us.
And for anyone listening, this provides a critical roadmap. It shows where human expertise is being outsourced, where it's being optimized, and frankly, where the new battle lines are being drawn.
It's a power struggle played out in product descriptions.
I love that. So let's start where the action is most immediate. Let's go to the ground level, the operational front line, with the champion of the daily struggle, the Project Finance Copilot, PFC. So PFC. This tool immediately positions itself as the AI for the trenches.
It really does. Our sources describe it as sitting, and I'm quoting here, at the intersection of project delivery and finance.
Which is a very messy intersection.
It's chaos, and PFC is designed to turn that financial chaos into confident decisions.
For everyone involved, right? Not just the top brass.
Exactly. For the project managers on the ground, the finance teams trying to keep up, all the way up to the executive leaders who just need the bottom line.
Its whole domain is tactical execution. The stuff that, if you do it poorly, just bleeds the company dry bit by bit.
And its expertise is defined by the sheer volume and the velocity of the data it handles. The core pain point it's attacking is the old way of doing things.
The spreadsheets.
The endless spreadsheets. I mean, think about managing a massive project, like building a new factory or a huge infrastructure overhaul.
Right.
It used to mean just laborious manual calculations, spreadsheets filled with assumptions that were out of date the second you saved the file. Siloed reporting.
And the worst part, the killer, is the delayed insights.
The delay is the real enemy. That's what the source material hammers home. PFC's core promise, its first aggressive claim against that old manual way, is instant clarity.
Right. So instead of a project manager having to manually pull data from a dozen different systems,
Or waiting days, sometimes weeks, for reports from accounting and procurement to finally sync up.
PFC gives them one single, immediate, holistic view.
And we really need to dig into how it does that, because that's the source of its first competitive barb against manual work. Let's stick with that infrastructure project example. You've got hundreds, maybe thousands of transactions every single day.
Timesheets for labor, invoices for materials.
Rental agreements for heavy equipment, you name it, and the data comes in. Well, it comes in a mess. Sometimes it's digital, sometimes it's a paper invoice someone scans, sometimes it's just an email.
A total mess.
And PFC is designed to rapidly process all of that raw input and this is the key, identify variances from the original project plan instantly.
So no more waiting for the monthly review meeting to find out that your material costs are running 5% over budget.
Exactly. PFC gives you an up-to-the-minute dashboard showing that variance right now,
The moment it happens.
the moment it starts to happen. And that real-time visibility, that's what fundamentally changes the role of the manager.
They're not just reacting to old news anymore.
Right. They can, quote, react swiftly and even more critically, anticipate potential problems before they escalate.
That's a huge, if subtle, critique of any system that relies on a weekly or even a daily report cycle.
It is. PFC is basically saying, your delay is my opportunity. I see the financial fire starting right now, not next Tuesday, when the paperwork finally catches up to the reality on the ground.
By which point, of course, it's too late.
It's too late. The money's already been spent.
But just seeing the numbers on a dashboard isn't enough, right? I mean,
Yeah.
a wall of data can be just as paralyzing as no data.
That's a great point. And the source says the skill of this copilot is in synthesis. It has to translate. It takes these incredibly complex numbers and it synthesizes them into these concise, narrative-driven reports, things that are suitable for an executive who doesn't have time to dig into the weeds.
So instead of dumping a 100-page spreadsheet on the steering committee,
The executive gets a simple, high-impact summary.
and the examples in the source material really drive this home.
They do.
Instead of just a raw data dump, the summary might say something like, cost overruns are mostly from increased material prices combined with a specific labor scheduling problem in Sector C.
Or, forecasted completion costs are up 8% because of scope changes from last week that weren't fully costed when they were approved.
That is PFC claiming ownership over the story of the number.
It's delivering confidence immediately. And that confidence is what lets people act decisively. They're acting on quantified, immediate truth, not on gut instinct or month-old information.
Which brings us to the next set of barbs. The way PFC defends the budget and validates the details. This is where it really goes on the attack against what the source implies are the core weaknesses of human manual processes.
Yeah, the first and most obvious surrogate is invoice validation.
Which is, I mean, it's time-consuming and so prone to error.
Deeply error-prone. Think about procurement. You're trying to reconcile dozens, maybe hundreds of invoices for specialized equipment or services against the original purchase orders, the budgets, the contract terms.
It's a nightmare.
It's a manual nightmare. PFC automates that entire cross-referencing process.
Which means it's flagging discrepancies right away to, quote, minimize overpayment risks.
And that's a direct shot. It's a shot at human error and the lag time that's just baked into slow manual payment systems.
But it's more than just catching fraud or mistakes, isn't it?
Yeah.
It seems like it's about friction.
It's totally about friction and trust. If a supplier sends an invoice and it just sits in a queue for a week, maybe two, there's an inherent risk. There's distrust.
Right.
If PFC instantly validates it against the contract and the budget, the whole process just accelerates. You build trust through speed and accuracy.
And then there's what the source calls budget defense. This is tied to audits, stakeholder reviews.
When a project manager has to stand up and justify why they're over budget.
They need a really good story. They need documented rationale.
And PFC provides that rationale based on the underlying data trends instantly. The nuance here is what makes it so powerful.
How so?
It doesn't just say labor costs increased. It correlates the data. The example they give is just perfect.
Yeah.
It provides documentation that says the increase in labor hours correlates precisely with extended workdays due to documented weather delays, which required a 3-day schedule adjustment.
That is an airtight defense.
It's impenetrable. It makes the project manager look credible, and it grounds the entire discussion in undeniable correlated facts.
So PFC is this constant financial watchdog. It's always monitoring, alerting managers when they get close to a budget threshold, and even recommending specific actions.
Yeah, like reallocating resources from a task that's ahead of schedule to one that's falling behind.
Or flagging a supplier contract that's about to be breached so you can renegotiate before it becomes a problem.
It's all about controlling overruns by giving people insight-driven decisions based on instant, reliable data.
So if we pull back and look at the big picture, the strategic impact of PFC is that it completely changes the manager's job.
Fundamentally, it shifts them from being a reactive data processor, a financial firefighter,
Right.
to being a proactive strategic planner. The source really emphasizes this move from firefighting day-to-day issues to actually optimizing resources and protecting profits.
But the deeper point, The thing that really separates it from, say, a normal planning tool is its modeling capability.
The scenario analysis, this is where it gets really interesting.
I'm curious about this. I mean, complex projects never go according to plan. So how does PSC handle that reality? Does the source get specific, or is it just a marketing claim?
Oh, it gets very specific. And this is where PFC lands a major competitive punch against the old idea that financial planning has to be slow.
Okay.
Projects are always facing scope changes, unexpected delays, price shifts. PFC's scenario analysis lets managers simulate those changes.
Like a change order from a client.
Exactly. Add a new task, change a material spec, whatever. The manager can instantly see the potential cost and schedule impacts of that change.
So instead of a 3-day delay while the finance team runs the numbers.
The manager can negotiate with the client right there in the meeting, knowing the full financial impact of what they're agreeing to immediately.
That's a huge advantage.
It's massive. And then there's the stress testing. This is the ultimate risk management tool.
So you can ask it what-if questions.
Precisely. A manager can ask the AI, what happens if a geopolitical event makes steel prices jump by 15% next quarter? What does that do to our final margin?
And it gives you a real answer.
A quantitative, traceable answer for contingency planning. No lengthy, multi-departmental, manual number crunching required.
So that's its core claim to operational dominance then. PFC is basically shouting, my domain is the granular truth, the predictable future of your operation, and I deliver it at a speed that no manual system can even dream of touching.
They are the tactical execution experts. They own the operational financial truth, and their job is to protect the margins day in and day out.
But, and this is a big but, the truth is confined to the project itself?
It is, which means we have to transition to the counterclaimant. The AI that operates far, far above the project level.
This is where the stakes get exponentially higher and, frankly, a lot more expensive. All right, so if PFC is our frontline champion, Deal Value Advisor AI, or DVA AI, is the boardroom strategist.
A 4-star general.
Exactly. This AI operates exclusively at the senior manager level and above. Its whole focus is on the biggest financial levers an organization can pull.
We're talking mergers, acquisitions, M&A, divestitures, massive corporate transformations. It immediately claims a much, much higher altitude than PFC.
And that positioning right there is a direct competitive play.
Absolutely. The audience for DVA AI executives, investors, deal teams, that signals a focus on decisions that are measured in the hundreds of millions or billions of dollars.
Not the variance control on a single project's budget.
Right. Its mission is maximizing deal value across the entire life cycle. Pre-deal strategy, diligence, integration.
Okay, let's pause there for anyone listening. The source mentions day 1100 integration. What are we actually talking about? It sounds like the chaotic period right after a merger.
That is exactly what it is. Day 1 is the moment the deal officially closes. Day 100 is that first major milestone for proving to the market and to your own company that the merger wasn't a huge mistake.
I can imagine the chaos.
It's a period of extreme organizational chaos, and it's where a ton of value is often lost because of poor planning. DVA AI is designed to provide actionable, prioritized plans for that period.
So an example would be what? 2 merging IT departments?
Perfect example. DVA AI could analyze both departments and immediately identify which systems to consolidate for synergy savings and which legacy systems have to stay online for, say, regulatory reasons. It prioritizes the path that gets you to the fastest positive cash flow impact.
So it's about making sense of 2 different companies and smashing them together into a coherent financial whole fast.
Very fast, which brings us back to the competitive barbs.
Right.
DVA AI's self-description has this incredibly telling critique built into its input versus its output.
Okay, I think I see where this is going. PFC's whole thing is processing vast amounts of raw financial data, getting these clean, pristine feeds.
Right. DVA AI, on the other hand, says its typical inputs include things like the investment thesis, financials, and, crucially, limited or imperfect diligence data.
And there it is. That's the first major punch thrown in this fight.
It's so subtle, but it's devastating.
DVA AI is implicitly saying, PFC, you're great, but you need clean, perfect, vast data to function on a tactical project. I live in the real world of M&A.
Where information is scarce, it's siloed, it's protected by lawyers, and it's always imperfect. My value isn't processing perfect data, it's transforming limited and imperfect data into decision-ready insights for the board.
It's a boast about its ability to succeed where the data environment is fundamentally broken. It's saying it accepts strategic level chaos and turns it into clarity for the highest level of leadership.
And its deliverables, its outputs, they reinforce this high-altitude position. These are not daily budget dashboards.
Oh,
They are, quote, concise, executive-ready artifacts, like quantified value bridges, diligence heat maps, and synergy models.
okay, hold on. We have to unpack that. Quantified value bridge. What exactly are we talking about here for someone who doesn't live in the M&A world?
Good question. A quantified value bridge is, conversationally, it's the document that justifies the deal price to the shareholders.
Oh, okay. The why we paid so much document.
Exactly. It provides a super detailed breakdown of how you're going to make that money back. If you buy a company for $500 million, the value bridge shows. Here's $100 million from combining our procurement departments. Here's $50 million from optimizing the sales staff. And here's $350 million from expanding into new markets that this merger enables.
And DVA AI automates the creation of that.
It automates the generation and, importantly, the stress testing of those complex projections. It makes sure they're defensible and directly linked back to the valuation.
So it's the ultimate arbiter of the investment strategy. What about a diligence heat map?
That's a visual scorecard. During diligence, that's the intense pre-deal investigation. The deal teams are just drowning in data.
Right.
The heat map visually prioritizes the risks. It shows the executive team, at a glance, where the biggest financial, operational, or tech risks are hiding in the company they want to buy.
So it cuts through the noise.
It ensures that a critical red flag isn't missed in the deluge of documents.
Which brings us to the second, and I think maybe more aggressive, Barb. This one feels like it's aimed subtly right at PFC's core claim. PFC says it turns complex numbers into stories for executives about their project. DBA AI says, hold my beer, I connect AI and technology choices directly to impact, cash flow timing, risk, and valuation, always prioritizing materiality, speed, and board-level clarity.
It's a textbook positioning move. It's a masterclass in a disguised barb.
How do you read that?
DVAI is effectively saying, PFC, that's cute. You handle materiality on the operational margin, making sure the project doesn't overspend on concrete.
I handle materiality on the valuation of the entire enterprise.
The decision to spend $5 billion in the first place. By emphasizing materiality and speed in the context of a high-stakes deal, it inherently positions PFC's operational control as a necessary but ultimately a minor supporting act.
The main event is the deal.
The main event is the deal.
Okay, but I have to challenge this a little. Isn't operating with imperfect data just a fancy way of saying that DVA AI is generating high-stakes guesses? Hypotheses that are inherently harder to verify than PFC's hard, granular facts.
That's an excellent critical point.
I mean, how can a board trust a multi-billion-dollar valuation that's explicitly based on incomplete information?
It's the core weakness DVA AI has to overcome, and the source material actually addresses it head-on. Because its strength isn't in generating truth like PFC aims to. Its strength is in managing uncertainty.
Okay, explain that.
DVA AI's key function is to surface the upsides and the downsides in these deals, and its whole purpose is to validate or invalidate the entire investment premise as early as possible.
So its value is in pressure testing the initial hypothesis.
Correct. And that handling of uncertainty is its ultimate counterclaim to PFC's operational truth. While PFC is designed to eliminate surprises within its own little project world, DVA AI thrives in an environment where surprises are guaranteed. The source really emphasizes what DVA AI does when information is missing. It clearly flags its assumptions, it sizes value ranges. It'll say synergy savings could be between 100 and 150 million, and that depends on how long regulatory approval takes.
So it quantifies the uncertainty.
It quantifies it, and it recommends the next best analysis to narrow that range. And this ensures that, quote, momentum isn't lost.
That frames DVA AI as the tool for decisive action under extreme uncertainty.
Which is a very different, and you could argue superior, claim to PFC's reliance on having clean, robust, real-time data. It's saying, I can lead the charge when the fog of war is thickest, while PFC needs perfect visibility just to move forward.
That's the essence of their competitive tension right there.
It is. PFC makes sure the ship is sailing correctly and profitably on its current course day to day.
While DVA AI makes sure the ship was bought at the right price, is pointed in the right strategic direction, and won't hit an iceberg in 3 years, even if the charts were incomplete when you bought it.
The operational truth versus the strategic certainty. A fantastic standoff.
It is. And they're both fighting over who really owns the concept of confidence in the financial sphere. But The financial sphere is just one arena, isn't it?
It is. The sources showed this fight is also happening on a much more personal level. These AIs are also vying for control of the individual's strategy, their career, their hustle.
And this is where the barbs get even more direct. They get personal, and they're aimed not just at other tools, but at us, at the user's own lack of clarity. Okay, so we're moving now from the sort of anonymous corporate AI to these fiercely individual ones.
Yes.
And the first one we have to look at is the unfair advantage AI. We'll just call it the coach.
And the language here, I mean, it immediately sets a confrontational tone.
It's an attack right out of the gate on the human condition of indecision, paralysis.
It is. The AI is described as a sharp, no-nonsense coach who actually cares. That no-nonsense is the key.
Why that phrase?
Because this AI is designed to bypass all the emotional complexities, the social niceties that often paralyze human advisors. It's not here to be your friend.
And its main barb, its core promise, is to challenge your blind spots. Yes, sometimes unapologetically.
That word unapologetically is maybe the most aggressive piece of language we've seen so far.
I think so too. It's a direct insult to any other AI, or any human coach for that matter, who is designed to be polite or accommodating.
The coach is saying, my only purpose is to get you results. And if that means I have to push you way past your comfort zone or tell you a very difficult truth, I will do it without softening the blow one bit.
This is an AI that's optimized for efficiency over empathy.
Totally. Its entire value proposition is about solving the problem of being stuck. It cuts through what it calls fluff and theory overload to give you a clear step-by-step action plan immediately.
It says it helps the user win in real life, not just think about it.
The contrast is so stark, it's actionable momentum versus just intellectual paralysis.
It even positions itself as dangerously smart. Its competitive claim is that it sees patterns faster than humans can. It connects dots that we miss.
Showing the user, quote, exactly where leverage lives. This is an AI that is claiming superior cognitive speed and depth compared to human analysis.
It's basically telling you you are too slow. You're too stuck in your own head to see the patterns. Let me, the AI, show you the immediate path to maximum leverage.
And that focus on leverage is key. It'll analyze your skills, the market, your resources, and it instantly maps out the path of least resistance to success.
So if you're debating 5 different business ideas...
Wait, the AI ruthlessly dismisses 4 of them and gives you a detailed execution plan for the one with the most leverage. No apologies.
But here's a fascinating barb. This one isn't just aimed at the user's own laziness. It's implicitly aimed at the big, heavy corporate AIs we just talked about, PFC and DVA AI.
Usability barb.
Exactly. The coach stresses that using it is effortless. It requires no manuals, no jargon, no friction.
This is a clear, concise dismissal of the inherent complexity of those big corporate tools. Remember, even PFC's own description admitted that implementation requires a big investment in training staff or integrating systems. So the coach is saying, while those enterprise AIs require weeks or months of high-dollar consultants and staff training just to get started, I give you instant, powerful, career-changing leverage without a single manual or setup fee.
It's a critique of complexity itself. It's saying that high-friction implementation is a sign of an old, inferior system.
It's the low-friction, high-impact argument against enterprise scale. It's all about minimizing the user's need to adapt to the tool. It argues the tool should adapt completely to you.
Which leads to that claim that using it feels less like learning software and more like having a calm, dangerously smart advisor in your corner.
Seamless integration into the human workflow, something the big enterprise AIs really struggle with, at least at first.
Okay, now let's look at its neighbor in this personal growth space.
Yeah.
The entrepreneur AI. This one is less about your psychological blind spots and more about pure economic hustle. It's about turning ideas into income, fast.
It's the monetization engine. Its function is super practical. It helps you define your offer, your target audience, your persuasive messaging, your sales funnel.
Specifically for small business owners. Solo entrepreneurs.
Exactly. It takes a vague input like, I want to start an online coaching business for middle managers, and it turns that into clear, market-ready outputs.
Like a pricing model, a sales funnel outline.
Persuasive messaging templates, you name it. Its whole promise is momentum.
Right. It removes guesswork, which is the absolute enemy of the small business owner.
And it replaces it with tangible progress. The sources talk about writing landing pages in minutes or planning weeks of content in a single sitting. It's attacking that feeling of being overwhelmed that causes so many early-stage businesses to just stall out.
And just like the coach, It uses that effortless integration, Barb.
It does. It responds like a strategist, marketer, and operator rolled into one, making everything easier and more profitable.
So it's implicitly arguing that hiring 3 different human consultants would take longer, cost more, and give you less coordinated advice than this one specialized AI.
That's the claim. So this group of personal AIs, the coach and the entrepreneur, they're essentially trading barbs with the entire corporate world that relies on slow manual processes or complex software.
They're all about speed, low friction, and immediate tangible returns, which is often the exact opposite of the slow, structured, risk-averse world that PFC and DVA AI live in.
It's agility versus rigor,
Mm.
startup versus enterprise. But the sources show there's one more AI, a meta-layer AI that sits above all of them, evaluating their very existence.
The ultimate gatekeeper.
So now we have to look at the AI strategy and adoption coach. This AI isn't fighting over project margins or deal valuation.
And it's not fighting over your personal success.
No, it's fighting over the strategic right for any AI to exist inside the organization in the first place.
It's the meta-strategist, the tool that has to validate the need for all the others.
Its core mission is huge, making AI useful, strategic, and understandable without the hype or technical overload.
In a world that is just saturated with AI products like the 4 very aggressive ones we just discussed, its job is to be the rational, economic filter for leaders.
And here is its critical competitive barb. This one is aimed at everyone, at the aggressive marketing of the entrepreneurs and the focused efficiency of the corporate AIs.
Okay, what is it?
It grounds every AI proposal in the user's real business context. It clarifies exactly where an AI creates measurable value and where it's just noise.
Oof, just noise. That is the ultimate dismissal in this competitive hierarchy.
It really is. If DVAI is arguing that PFC is too operational and tactical,
The strategy coach is arguing that DVA AI, PFC, the coach, or any other AI initiative might just be expensive hype disguised as progress.
it's the ultimate gatekeeper. It judges the economic and strategic viability of every single AI project that comes across the desk.
I mean, you have to think about the conversations happening in a CIO's office right now.
Constantly.
They are just being bombarded by vendors selling the next big AI.
And the strategy coach is designed to help them translate all that. To translate the complex AI concepts, the algorithms, the LLMs, into clear, executive-ready language. It helps leaders focus only on the initiatives that will actually move the needle financially.
So it's not just a translator, it's enforcing strategic discipline.
Absolutely. So if a team comes forward and proposes buying a fancy new AI tool for, say, customer support sentiment analysis,
The strategy coach would immediately assess, does this actually solve a core problem that's costing us X amount of dollars right now? Or is it just a shiny new toy?
exactly, it evaluates based on measurable value. If the proposal for DVA AI comes forward, the strategy coach doesn't argue about the M&A thesis itself.
Yeah.
It argues whether AI is the best tool for validating that thesis, given the company's current data infrastructure and its appetite for risk.
So it might greenlight DVA AI because the strategic stakes are massive and speed is critical.
But it might totally dismiss a proposal for a generic marketing content generator if the measurable value gain is tiny compared to the cost of actually implementing it.
Which means its primary value is in guiding prioritization. It helps design the roadmap. It makes sure that the organizational commitment to AI feels achievable, not overwhelming.
Yes. It keeps momentum high while keeping risk low. It ensures that initial investment that PFC talked about, the integration costs, the staff retraining, that it actually pays off strategically.
It's the arbiter of legitimacy for the entire AI ecosystem.
It is. And when you connect all the barbs, you can finally see the entire hierarchy.
Okay, play it out.
If PFC is the ultimate operational truth teller, ensuring daily data integrity.
And DVA AI is the strategic thesis challenger, acting decisively under huge uncertainty.
Then the strategy coach is the foundational architect. It's the chief economist. It decides which truths are worth listening to and which theses are worth funding.
It owns the foundational question: does this investment create measurable value?
And those lower-level personal AIs, the coach and the entrepreneur, they're operating outside the corporate gatekeeper's direct control, but they're still judged by that same metric of measurable, decisive outcomes.
So the hierarchy is all about the different stages of decision-making. The strategy coach provides the architecture, DVA AI sets the strategic trajectory, and PFC ensures the execution on the ground actually matches that projected reality.
And that's the core competitive tension the sources reveal. The fight isn't over who is the most intelligent general AI.
No.
The fight is over whose expertise, the operational, the strategic, the personal, or the architectural, is more material to the success of the whole enterprise or the individual. They're all trading barbs over the consequences of failing to adopt them.
Okay, so as we synthesize all of this, as we review these 5 competing descriptions, there's one common thread that runs through all of them. Whether they're dealing with project finance, M&A, or your personal career, the promise is always the same: to replace chaos and uncertainty with confidence and decisive action.
Confidence is the ultimate premium product in the modern economy. It really is. In a world that's just saturated with information and risk, the ability to act decisively,
Knowing your numbers are sound.
or that your strategy is optimized, that is priceless. PFC gives you confidence in your daily project delivery. DVA AI gives executives confidence in their billion-dollar deals. The coach gives you confidence in your own career plan.
Every single one of them centers on this emotional, but also very tangible outcome.
It's all about delivering confidence.
But let's bring some reality back into this. We have to talk about the real-world friction. The coach openly critiqued it, but the PFC source was the only corporate one that really touched on the cost of implementation.
Right. I mentioned that adopting the tech might require an initial investment in training staff or integrating systems.
This isn't just downloading an app. This is organizational change.
That is such a crucial point. The sources emphasize it subtly, but it's there. While the personal AIs boast about being effortless, the corporate AIs inherently demand organizational discipline.
What do you mean by that?
Well, for PFC to work perfectly, it needs clean, harmonized data feeds from every department. Accounting, logistics, procurement, they all have to be on the same page.
That sounds hard.
It's very hard. And for DVA AI to build its heat maps, it needs access to highly sensitive, siloed diligence documents. That requires significant upfront capital, it requires retraining staff, and it often requires a painful process of aligning data structures across the whole company.
So the promise of long-term returns from PFC and DVA AI is contingent on this successful and often complex integration.
Exactly. The transition from a manual, chaotic system to an AI-driven, confident one is not free, and it is not instantaneous. The cost of confidence, at least at the enterprise level, is initial organizational friction and a big capital outlay.
And that's where the strategy coach's value really shines through. It's there to make sure that pain is actually worth the long-term gain.
Right. But if the organization commits to that friction, the ultimate payoff that these AIs promise is substantial. Massively improved accuracy, decisions made faster than your competitors.
Stronger trust from stakeholders because the numbers are instantly defensible.
And at the end of the day, just better business outcomes.
So this leads us to the big takeaway for anyone listening. What does this intense, specialized language mean for the future of our work?
The answer from the source material is really clear. Generic AI is not going to cut it for these high-stakes roles.
You can't just use a general-purpose model for this stuff.
No way. You can't ask a general LLM to perform the kind of specific quantitative stress testing that PFC does on a change order, or to generate a quantified value bridge that DVA AI creates, one that integrates regulatory risk and cash flow timing.
The expertise is baked into the tool specialization. It's training data, it's specific models.
PFC for tactical execution, DVA AI for strategic valuation, the right tool for the job.
And the final, and I think most profound shift here, is in the role of human expertise itself. All of these AIs, PFC, DVA, the strategists, they all emphasize translating raw data into executive-ready insights or concise artifacts.
Which means our human value is moving rapidly away from the calculation of numbers and the sifting of data.
The AIs have decisively claimed that territory. They do it faster and more accurately.
So our new higher value role is in asking the right strategic questions. It's in challenging the AI's underlying assumptions. And it's in acting decisively on the summarized narratives they give us.
We're shifting from being the calculators to being the strategists who have to trust, but also critically evaluate this dangerously smart advisor in our corner.
The barbs are now being traded by the algorithms, and that leaves the human to make the final, informed, confident judgment.
The AIs are fighting over who is the superior expert in their domain.
Which allows us to step back and become the ultimate decision makers, armed with this supreme confidence that our inputs are sound. Hashtag, tag, outro, Madger.
So we've explored this fascinating and, surprisingly aggressive competitive landscape today.
We really have.
We've traced the strategic claims of the Project Finance Copilot, the Deal Value Advisor AI, that uncompromising coach, And the MetaStrategy coach.
We've seen how they define their turf, from defending a daily budget to calculating a multi-billion-dollar valuation thesis.
All while subtly critiquing the limitations of their rivals. It's really a masterclass in positioning.
And all their claims, all their competitive superiority, it's all rooted in the same shared goal, delivering confidence and speed.
They're built to cut through the noise, eliminate friction, and provide immediate defensible answers in these really high-stakes environments.
Which brings us to a final thought.
And this relentless focus on speed and decisiveness, it leads to a final provocative thought for you to consider. The source material suggests that using these AIs is less like learning software and more like having a calm, dangerously smart advisor in your corner. So if the most powerful AIs are designed to be effortless, decisive, and even unapologetic in how they challenge us, does the pursuit of absolute confidence inherently require us to embrace a degree of aggressive automation?
And how much of the complex, subtle, difficult human work of negotiation, of challenging the status quo, of the messy, nuanced interactions that define leadership?
The art of trading carefully disguised barbs and winning political support.
How much of that are we handing over to an algorithm that was built specifically to cut through all of that messy but maybe vital noise of human interaction?